Alrighty, monthly trading recap for this February of 2022. Biggest red month that I have ever had in my trading career as of yet. I know it probably will not be the smallest and will not be the last red month that I have, but taking it all in stride. Truly feel that even though it was biggest P&L loss month that I've ever had, this was one of the months of most amount of knowledge P&L bank growth that I've ever had in my trading career as of yet, and just growth of myself myself outside of trading and myself in trading as well too. And I'm going to get to a lot of that specifically. This was really a month of futures trading, stemming hard, getting into getting away from a lot of the small cap and OTC tickers trades that just really weren't working out, and pushing hard in a new strategy and a new opportunity in a new entire instrument of trading that I just never had been exposed to before. And it was very exciting all the way around, jam-packed with knowledge and losses and wins and good, bad, and ugly all along the way. And I'm excited to get into it. It was also certainly the week of, or the month of, the unfortunate bad hair days. A lot of hair hats coming on in these daily trading recaps, and it's going to be in this monthly recap as well too. I forgot when I got that haircut, but that's just what I specifically remember about this month as well. We'll let this hair grow out long again, give you guys a little flash of the beauty, the Fabio hair there. I think, yeah, that's also wanted to mention, so I normally have the monthly goals that I just set for myself and just kind of want to come into the trading day with of, hey, outline my rule sets before each trading day, recite them, just kind of go through them. What do they mean? Do I really want that rule there? Do I really need to follow that rule? What does that rule mean? Just going through those to cement those ideas in my head each day. And then just with each trade that I have a specific goal of, or just a day in general of what the goal is for that month of what I want to be as a trader. This month's goal was put in the work necessary to succeed. And it was a little bit broad in the sense of, okay, what does succeed mean? What does put in the work mean? What does that look like? And I truly felt my definition of that in my head was going to be, I'm not going to make $1 million this month. I could. I mean, it's possible, but I know it's extremely unlikely. I'm not trying to pursue retirement within this month. I'm not trying to make an entire living forcing myself to the bone within one day, 1 week, 1 month. That is not my goal. I am trying to better myself more than I have already in my trading career in this month. And that's what, with everything that I did with my data collection, with my preparation outside of market hours, in market hours itself, what I was doing, I spent a lot of time kind of checking phones and looking away from the market when I was trying to distract myself a little bit. I can give myself that, but also just what I was doing market hours of, I mean, I don't want to break it down to every free second, but almost every free second, hey, what am I doing to better myself? And in no way, shape, or form comparing myself to anybody or anything or any Twitter handle out there, but saying, how can I better myself? What steps am I taking? Where am I lacking? Where can I push more? And identifying those key areas. And I truly felt, I mean, there were some areas that I did fall away from the rule sets that I've established myself on days, you can see like the 24th here. That was a doozy of a day, and some of these other red days that maybe I broke some of the rule sets that I have for me as just a general trader, but I truly feel with the preparation I was putting in, with everything outside of market hours, with market days and market hours themselves, I was pushing harder than I have, or just more focused, streamlined than I have in my past trading career. And I think it certainly has paid off with much more experimentation and knowledge P&L filling opportunity than I've ever seen. And that's why I alluded to it again early on in this video of, I truly feel this has been a month of immense and more growth for me personally and as a trader than I've ever had as of yet in this trading career. So very exciting all around in that regard. And I kind of just wrote out everything that I want to talk about specifically with this, where I'm at currently with this futures trading strategy, this morning volatility spread trading strategy on the S&P 500, kind of where I've been with this month and where it's potentially going to go within the next few months, years, decades, however it wants to be there. But I guess I'll just go over initially what this strategy, we'll just kind of go over the storyline. Let's just give it a little bit of flow. The original intention of the strategy, like I alluded to a little bit, was to get away from me pushing buttons on the small cap NASDAQ tickers, on the OTC tickers, those types of charts that I kind of grew up on in my trading career in the hot 2020 market, in the absolutely crazy early 2021 market, but then just kind of slowly has begun to fizzle out. And especially at the start of this year in January, has just not been producing the awesome or insane volatility, repeatable, consistent opportunity day in and day out. So, as Chris alluded to and sending me a call at one point, but also me getting on that frame of mind mindset that these are the times at which it's very easy to just slowly burn your account down and lose money trading that same way that you've been trading in the hot market, but just the opportunity really isn't there, and just a small little paper cut here, and just slowly adds up. And I'm seeing, I just saw on Stocks to Trade, it looks like Bryce Tuohy's got a 15K month in the red. Just little things like that, okay, yeah, that's 1 month, it's tough, yeah, it's whatever, but then what if he does the same thing in March? And it's not like he's taking stupid trades or not cutting losses quickly or following his rule set, but if just the opportunity is not there, then it's not there. So definitely with this month, and for where I'm at in my trading career, I said 100%, let's go do something new. Let's just experiment. Let's throw ourselves into an entirely different modality and see if we can swim. So that was the original intent. And now alluding to where I was finding myself with this strategy, what kind of got my foot in the door. I've been taking data on SPY for just ever since I really started trading, of just, hey, let's get the open, high, low, close. Let's just keep a reference of what the day move was, what the after hours move was, where was the VIX at, all those different type of factors. And I really wasn't trading on it whatsoever, but just keeping involved in it to see, hey, what is the overall market doing? Is there anything? Just keeping myself more involved with the market, just beyond small cappers or NASDAQ tickers, OTCs, beyond that. So from that data, then I was able to expand upon that a little bit more, download more data, more back-tested data from, it's all the way back to 2012 that I got some more data from the NASDAQ. And of course, that was fun trying to comb through that and realizing that a lot of those days were wrong and misprinted because of the misprints intraday. Oh my gosh, trying to comb through, having the Excel sheet on one side, the Thinkorswim chart on the other, and then seeing, okay, was the high actually this on this day? Was it the low actually this on this day? I've gotten back to like 2015 at this point, but that takes a long freaking time. I'm glad I only have to do it once, but just double checking that all those days are correct. I've had to correct a lot of them, and that's kind of altered some of the data that I've collected from it on, especially on like gap up days of, it actually gets a hard misprint, or gap down days, or there's just so many different variables like that I've had to fix that end up screwing the data. So that was fun. Just a little quirk that I've been also trying to work through on this month. So in collecting all that data, then just, hey, what can we pull from it? What different scenarios can I draw from it? What do different days look like? What is a very high probability? That's in essence what I was looking for. Give me something with a very high percentage chance of happening. Create a scenario in my mind, or not in my mind, on paper, from this back-tested data of something that happens. That's just what I was experimenting with and throwing out there. And sure enough, I started to find and see, wow, okay, we're in pretty volatile times, using a metric at which wasn't defined by me or by any amount of emotion, or just a kind of a broad sense, in the sense of, hey, after a head and shoulders pattern, SPY does this, or after a breakout point. Breakout's a little bit more well-defined, but SPY too can have many different terms of breakout, of, okay, we're at this little regional breakout, or we're at an all-time high breakout. So coming it down to just more finer levels of, hey, what are undebatable levels at which I can find some data points. And of course, opening price, you can't debate the open price. I'm still able to find some areas at which different brokers and places are debating the open price, between like Thinkorswim or Yahoo Finance, whatever, blah, blah. But it's the open price. Okay, so that's a reference point that I can use. And sure enough, as I'm going through more of this data, hey, a lot of these days, market hour days, print 0.25% above that open price and 0.25% below that open price within the same day. Oh, that's very interesting. Okay, let's look at what days specifically do that most often. Okay, Fridays do that a lot. Well, Mondays do that a lot as well. Okay, Wednesdays do this a lot as well. Okay, wow, maybe options expirations have something to do with that, alluding to there's more volatility intraday on these. Maybe Tuesdays and Thursdays are more likely to be trend days. Okay, this is just interesting factors. Okay, then let's refine that to maybe 0.1%. How many days go 0.1% above the open, 0.1% below the open? Okay, that's interesting data that we're collecting. How many days when it's a 1% gap up in after hours do that, and blah, blah, blah. Just fine-tuning, putting more filters, parameters on that style of data collection and seeing if there's something tradable from that. And sure enough, it's as I'm fine-tuning it more and more and able to now, from learning how to freaking code from this awesome guy online that was able to get back-tested Thinkorswim charts, able to take that onto an Excel spreadsheet. Now I'm able to use the ES data from the first 15 minutes of market open on that futures aspect. So now I can use that data specifically and as I'll get into later, shorten my time frame, put those parameters on it, but get even more refined and saying, wow, look at this data specifically here. There's just so many, infinite amount of ways that you can look at this potato to try and peel it. But that was just really the whole intention and pursuit of this month in itself. And I think we were taking some good steps in just myself as a trader of, wow, this is something that I can do. It doesn't mean that this one specific experiment or research has to be the almighty winning trade, but it's a step forward. This is the type of mentality that I want to carry forward in my trading career. So I think that's the thing that I'm most excited about. So now I'll talk to the problems that I was able to, the little quirks and bugs that I was able to find for this specific strategy. I'm alluding to now and thinking of these are the Thomas Edison light bulbs that didn't work out before we eventually find the right one that does work out. So first one that I found on the 10th of this month, that was Thursday. And as you can see here, however many trades there were on these days, this was just the simple spread trade up and down on there through futures, ES, MES. First problem that we found ran in on the 10th, having enough margin to be able to sustain larger unrealized losses. At this point in time on the 10th here, I was still using the full market hours day as my time frame for calculating, looking for whatever percentage above and whatever percentage below the open. But on this Thursday, I think we had a very hard gap. I think that was the job and unemployment numbers or some news came out, tanked the market before the open, and then we just had an immediate V right back up from there. And I got stopped out by NinjaTrader. NinjaTrader stopped me out. I did not do enough due diligence to understand what unrealized margin I needed to have to be able to cover the unrealized P&L. So it stopped me out, made me take a loss that I did not want to take. And sure enough, it went exponentially more. I think like $3,000 in the red I would have been, but sure enough, did eventually end up producing the points that I wanted to see to be able to take profits. So that was, it was a tough loss, and yeah, smack on me for not doing enough due diligence to understand, okay, I can't trade this way because I don't have enough margin to be able to sustain that loss. But that was also a little bit of an igniter for the next problems that would eventually arise for this strategy as well. As I found on the 17th, that next week, Thursday, I definitely needed to shorten the time frame for which I was looking for to trade this strategy. Still using that same full market hours day for my time frame on this one. And the 17th day, taking the biggest loss that I have ever taken in my trading career at this point. Really have not taken a winner anywhere close to that, which is just, in my book, unacceptable for anything being profitable or consistent going forward. But it doesn't matter if your strategy has a 99% win rate. It becomes incredibly difficult to become consistent and profitable if that 1% day, that risk day, the day it doesn't work out, has to be this near infinite, uncontrollable risk level. It's just I'm succumbing myself to the whims and will of whatever the market says, and that's just really not a good feeling to be a part of, especially when I'm trying to make this a very algorithmic and short, quick strike, in and out trade, utilizing a full intraday time frame for the strategy. Just after that realization on this day, it was just like, okay, yeah, I get it. This can't work, and it's not going to be able to work this way. And I know too, especially as I try to apply it more and more, backtesting data always works out awesomely, right? It's just you're never missing a fill. You're never sick or late on a day or whatever. And data is always perfect. And I always have great hindsight on those backtesting days too. But of course, when you try to apply these specific strategies, the rubber meets the road and things like this start to come out that, gosh, it's just unsustainable to do this. And for how I was trading it beforehand on the winners that I was taking, for the amount of winners that I would have to take beforehand in order to offset a loss like that it's just not feasible at that point. So, okay, we got to shorten down this strategy, the time frame for what we're looking for. That was realized on the 17th, I mean. 23rd, we realized profit targets cannot be set by feel. This was a Wednesday. I was coming into the day thinking, okay, I'm going to get both long and short, play the spread strategy again. But, I'm just going to get a feel to see, okay, if we move immediately from the gate to the upside and then we start to top, then I'll go ahead and take off my long position and then we'll start to tank down and then it'll be nice and easy and we'll start to bottom and then I'll cover the short position for whatever contract I was short. So then that was great in theory of, okay, yeah, now I can expand and push more points than maybe initially I was looking for and maybe get, instead of just like the 3 points above and below the open that I was looking for, okay, maybe we get the 6, 7, 8, 9 points and then it starts to top and then peel off and come to the bottom. And of course that whole back testing and just beautiful euphoria, this Willy Wonka wonderland in my head of how the trade was supposed to work out just completely just disintegrated when reality of the chart said, that just not is how it works. And I'm very, very glad that Wednesday was that mentality came on that Wednesday and that specific open came on that Wednesday, because that was just a big slap in the face and says that's not how it works. Because some of these other days I would have done extremely well doing that, and it would have just been beautiful price action that topped here. I kind of would have got an exit there, and then it would have started falling off and done pretty much precisely what I thought it should do, and I would have then been vindicated, been saying, okay, great, now I can do this. I know how to time the market. I can pick tops. I can pick bottoms. This is very easy. I just did it perfectly here. So I'm very glad I got slapped in the face and realized that problem to this strategy of that is everything against why I'm doing the strategy in the first place. I want to be completely algorithmic with this. I want to take myself out of the equation and be 100% unemotional, uninvolved in what I'm doing in pushing buttons. I want to set limit orders. I want to establish a position at market open and just set it and forget it and walk away. Play the odds, not play off of my emotions. That is a strategy, and that's what we realized on the 23rd, the 24th. On the 24th, we realized that just because it is the same buttons, just because it's the same broker that I'm pushing here on NinjaTrader, does not mean it's the same validity of a strategy or the same trade in itself. 17 freaking trades that I ended up having on this day. This day was a $200 winner day that I turned into a over $1,000 loser day because of my own stupidity and ignorance. This was a great day to realize that just I'm not hot shit, right? I was thinking that it's just scalping. ES trading, futures trading is so easy and awesome. All you need is like 2 points, and that's $100. That's awesome. That's so easy. And then, surely enough, you can realize that's a double-edged sword, and 2 points against you is also $100, but it's in the red. And then if you're taking 4 points then in the red, then that's like $200, and that's like tough. That's just like all your trade that you just got for a very nice, repeatable, consistent get in, get out trade that just ate up all of that. Oh, shoot. Okay. Well, because it is easy enough to just get that back. Okay. Let's get that right back in. And I think I actually did. I tried to finagle around with it and screwed myself out of that $200 that I got for that spread trade. And then was able, luckily, to get that back up to $200. And I completely said, okay, I'm shutting the computer, shutting it off, walking away. And a few hours later, I come back around the screen and I think, and I just believe, because I not only had a beautiful, awesome spread trade on that day, but then also was able to get it back up to that $200 mark that, okay, I know how to time markets and I know what's going on. I'll just take another ES long here, and then started sizing up far more than I should have. Got into a little bit of a hole, said, okay, well, now I have this hole to get into, and now I got to get back. I was up here, but now I'm not even just at zero. I'm out in a little hole. Well, I got to start digging myself out of the hole. Well, sure enough, if you keep digging in a hole, you just go deeper in the hole. So that's where I ended up on that day. That was an incredibly great learning lesson, that you need to define what your strategy is, and it is nothing else. And do not let that bleed, because it is, and I still believe it is, such a beautiful boring and consistent trade. That doesn't mean, I think that in looking back into it just externally on myself, I can think that because every time I was pushing buttons and just really not putting any hard emotional thought into the individual trade itself, that then all of a sudden every time I was pushing buttons, I believed that I was a winner and that I believed it was going to make money, because that's just the routine that I got into, versus the reality of, no, the work and the backtesting that I was doing in this was the real work. And these little scalpy trades based on absolutely nothing, just completely irrelevant and stupid, not factoring in any trade parameters whatsoever, any risk reward setups, just thinking, oh, I think it could go up from here. Oh, I think it could go short from here. Just screwing with what actual trading should be. Yeah, that was a great lesson to learn on that day there on the 24th. And 25th, another problem that we discovered, needed to keep up to date with the current margin requirements of the broker, because as I just found today, they did send an email on the Tuesday from that week, that 22nd, that because of the current market environment, I guess somebody was starting a war in Ukraine or something, I don't know. But because of the current market environment, the geopolitical implications, margin requirements intraday were doubled, which I did not realize. And I was saying on that daily trading recap that, oh, they screwed me out of like $500, $600, whatever, the other side of that trade. But in reality, had I realized that, I don't know if I would have even been able in the days before to throw more money through the ACH into my account to be able to take the full size that I wanted for that day, because I was very convicted on that day for volatility right out of the gate. So yeah, that was just a little indifferent day on that one. But yeah, did not have my due diligence and didn't realize what actually was going on of, oh crap, margin requirements were doubled on that day. And that was right over the top of my head that I did not realize on that one. So that was a problem exposed to us on that day. And 28th today, not being quick enough. As I'm shortening now this time frame for what I'm looking for this specific strategy, now I'm realizing, especially on the days when it's very tight, that I need to be extremely quick. And it comes down to not even just seconds, but milliseconds almost. And I was really unwilling for this month to put in the full investment for the lifetime license on NinjaTrader, to have the OCO orders, to have the ATM strategies, to be able to automatically put in profit target orders as I place the market orders for whichever side. But now I'm realizing into days like this that I could have gotten potentially filled. And I think it was a high likelihood of me getting filled today, because it was certainly was there. Price was there. Just a debate of would my order have been on top of the entry books and been filled in that quick of a time frame. But it certainly would have given me a chance. And it's for this type of trade, for how quick these charts end up moving. That was a lesson that we needed to learn today, that kind of when that fear, that hurdle of the money, spending the money to invest in the platform to be able to do what you need to do. I mean, that's just, it's almost a necessity. And I don't want to say that as a blanket statement, because each and every individual situation is individual, but like in this one of just, why didn't I not do that sooner? Why didn't I not just make this investment from the get-go, have this ATM strategy beforehand, so I wasn't trying to fiddle around with, okay, what did I get filled at? Okay, now I got to set my limit order, set it 3 points above. Oh crap, I misspelled that one. I was just trying, and wasting precious time and seconds when it is a very bang strategy this comes down to, that it can come down to on days like this, when really in that first 15 minutes, first 30 minutes, that it's just bang, not extremely long amount of time to dilly-dally with those orders. So that was a great realization that we had today. And those are the problems that we have realized as of yet with this strategy. And now I wrote here of future potential problems that I could see coming as a result of this strategy in the future, of just not taking enough advantage of the opportunity that is there. As we saw on this Friday, on the 25th, there was an immense amount of points beyond what I took it for on this Friday, regardless of that I wasn't getting filled on the short side or whatever. But there was far more points, both above and below, than I was looking for on that day. And I think in relation to how, of course, no strategy can ever work for the entirety of the lifespan of the market, this will have its glory days. This will have its kind of weaker days. As I look back on the data from 2012, 2013, 2014, those years, it's, there's still moves, but if I'm trying to do it back then, trying to do the same type of mentality then, I'd be looking for half a point or, a tick at that on those specific days for what real volatility is offered back then for those type of price moves. So certainly when the iron is hot, that is when we need to strike. And my mind is automatically going to the Jack Kellogg's and the Matt Monacos and the Kyle Williams of those guys, and of course the many mores, when they do their hard work, when they continue to show up, put in the grind, put in the time, when that extremely hot, ripe 2020 market comes about, that is when they just lever down, go all in, push harder and harder, because in the times like this, it's not going to happen every single day. And it is a kind of still a mind shift for me to say, not so much anymore, but still in that mindset of, this isn't a normal job. This isn't a salary paid position that I'm looking to get X dollars per day, and that's going to happen every single month, and that's going to happen every single year. Maybe have some red years. Maybe have going to be a lot of red months, but potentially going to have some red years. I'm still having a red year, still negative as a trader in itself. But it's just not a continual. This isn't a just, plan for this amount of money to come in every single month and just continue to plan your life that way of, hey, if the market is there, the opportunity is there, that's the time to strike. And then that affords the opportunity to not try to force anything when the opportunity isn't there. So that's what I definitely want to push with the current sentiment that is there with this market. We have lots of volatility and opportunity. The gamma exposure is certainly up there for it. So strike when the iron's hot. I'm still fine-tuning and going about with this strategy and the guidelines that I need to be setting for myself. But as it is there, I definitely can't take the lever off unless it absolutely 100% proves itself. Another problem that I could see coming about would be the weekdays, especially Tuesday, Wednesday, Thursday, just becoming too much of a liability, of a guesswork, as compared to, Mondays are pretty reliable. Fridays are definitely the most reliable. I could see this strategy forming into a solely Friday pursuit, that it just avoids all of the other weekdays and just only ends up trading on Fridays, because, Friday's not going to be 100%. Nothing is ever 100%, that it just always happens repeatably every single time. But the likelihood that is there, that is everything that I'm trying to push more and more of. How can we get this to the highest percentage possibly that we can? And then on the backside, maintain and manage our risk well on the days that it doesn't work. So that could be a potential another problem that I see myself, or just a situation that I see myself working into with this strategy of just really only looking for Fridays to trade volatility there. Oh, whoa. Whoa, whoa. Oh, sweet. Ultimately, I could see the death of this strategy coming as a result of just not being able to control the risk. When it's just so undefined and uncertain, like on the day of the 17th here. And even, I want to say, because I'm shortening down the time frame, then I'm helping that risk along itself, but that still doesn't define the risk. I mean, I'm still open to near infinite risk in a sense of, if it gets bad, it can get even worse in a hurry. It's not just because I'm shortening my time frame, I'm limiting my risk entirely. So I truly believe that for the long-term potential of this trade, something that could definitely stop me from keeping it in my playbook would be just those loser days, as I'm just seeing here now and having to sit through on these ones that I don't end up finding that hit for. That risk factor is incredibly important, and it's got to be factored in, that I did not do beforehand with the back testing. I was just so caught up in, oh my gosh, look at the win rate. Look at the hit rate of these things happening over and over again. And then as I'm seeing the days that don't really happen of, oh, well, I would have probably, not played on this day, or just convincing myself in hindsight that, oh yeah, that day, yeah, I probably would have seen this indicator and got out quicker, maybe just taking a little bit of a loss, but nothing insane that would have, taken me away from doing this strategy. But that's got to be a key factor. It just can't be the euphoria and happiness and saying, oh, look at this awesome movement, and blinding myself to the truth of what is actually there in the data. So above and all else, I think that could truly be the ultimate death of this strategy in my playbook. I also mentioned in today's Daily Trader Recap that the just tough part about this strategy in itself is if I do feel less convicted for whatever reason coming into today to try and trade that volatility, it's not like I can necessarily just size down, because should I set a lower profit target for that volatility day, should it be a trend day and miss entirely all of my profit targets, I'm taking less profit and secure and hedging myself less against the loss that I'm taking for the other side of the trade, as compared to if then I was trying to just look for even more points beyond on the other side, or just look leveraged on the other side. I want to say is what comes to mind, or looking for 10 points above and 1 point below is just what comes to my head, versus should I come to that market day and say, gosh, okay, it's a Thursday. Yeah, I don't really feel convicted. I think we're near some key levels. I think it could be a trend day today. But we're still volatile. GEX is, around negative 40 million, negative 40 billion, whatever it's at. I think it could still have some opportunity. On those days like that, it really is either I can't play it at all, or I still have to maintain that same size, because sizing down in profit target doesn't necessarily do me any good, because if it's not going to touch one side or the other, it does me no good to have taken a smaller profit on the side it does go to. I think that's the best way to put it. I think I just said that the best way I can. That is the tough part about this strategy of not being able to really shorten the profit target that I seek for the strategy, but then saying, okay, it's just almost that if I can't even touch that for that day, it's not necessarily a problem for me. I'm very fine with just not even playing it for that day, and pushing it maybe harder on the days that I feel more convicted on it having. But that is just an interesting element to this trade this strategy that I really haven't had with any other modality or trade yet in my trading career. So I am still not done with this strategy, even through the hard losses and negative that I'm still sitting in on that futures account. I'm not done with it yet. I do not think it's dead. I still think there is more experimentation left to come for this strategy. I can see myself sizing down for the rest of this week going into March now that I know how to do, or now that I have the capability to take just one MES long and one MES short. That was just another tough part about it too, because I wanted to take a spread trade but didn't really know I didn't have the Trader Plus and Order Flow Plus through NinjaTrader. I had to take one ES. That was the limitation for what I could trade, have my exposure at, because then I would have to go subsequently long 10 MES or vice versa, whatever. But then succumbing myself, okay, now I got to be going risking 50 points a share as a minimum, or $50 per point as a minimum. Versus what I could be doing now of going back to that MES scale and saying, okay, yeah, even though I feel like we say we're coming into a Thursday and I do feel less convicted on it, now I can use that risk level and say, because I'm trading MES now, my risk size is way down per point. Okay, now let's play around with offset price percentage points above the open or below the open, or vice versa. And then then I can define my risk a lot better on those days, compared to just continuing to have that same size, that $50 per point risk that I would have to maintain because I needed to take that trade through ES and MES subsequently, versus what I can do now because of the opportunity of Trader Plus and Order Flow Plus through TraderView there. And, in my pursuit of what I was researching and everything I was doing, I thought that, the gamma exposure would have a heck of a lot more impact, because it was the options, because it was looking at more of the futures involvement in it was looking at more of the market makers' involvement in the market versus just kind of technical analysis or Bollinger Bands or anything along those lines. I thought there was just going to be more validity that I really have not vindicated as of yet, and I can't say that it's a true indicator for me to either get long or not be in the play at all as of yet. And I could still see myself doing more research to say if there are any indicators along those lines through the GEX itself, the gamma exposure itself, to see, okay, well, maybe these days set up for potentially days in the future, or if there are entirely different indicators that do set up potentially for more involvement or conviction for me to get into this trade. But I still think there is some more testing for me to do in that regard to see if there's some external indicators that would make me feel more convicted for the trade on that day. Why or why not it would have volatility from the first few minutes of market open. But overall, I am extremely grateful for this opportunity to even still be trading, to even be alive. And I'm going to cut away from what I wrote here just for a little bit too. Like I mentioned a little bit in the daily trading recap, that I am 22 years old, and should I lose everything today, lose the house, lose my family, lose every single dollar that I've earned at this point, I still have I am a trillionaire in regards to time. Like I just have time over and over again to fail, get up, dust myself off, and get back out there again. It is just nowhere near the end of me for any single one of these lost days, for just anything that I do going forward. And that gives me a lot of excitement and, I want to say comfort, but just invigoration to know that, to push myself harder too, because why would I not fail then? Even if I lost everything, that almost sets me up better in the end than where I could be as of right now. Would I rather just be stagnant and sit still and maintain the same place as I am and die, or would I rather continue to move forward, take a few steps back, but see myself from where I was at a better perspective, and launch myself forward from there after those fall downs and get back ups? I'll get back to the script here of what I wrote, but I have just, in this month specifically, like I alluded to in the introduction, I've just learned so much more, exposed myself to so much more, and stretched myself further than I really ever have in this trading career. And I definitely would not have ever pursued futures or understood how futures actually worked, or what this modality actually is, what gamma is. Learning about lots of different market structures, and just, again, stretching myself a lot that I would not have done if I was still trading the little small cap setups, the dip and rips, the breakouts, the OTC tickers that way. And I'm very grateful for that. Even through this loss, even if that is all I trade in futures, I'm extremely grateful for the opportunity that I did have, and just continuing to pursue knowledge and the betterment of myself in the future of this trading career. I'm very excited about all of that. And I wrote my last note here in my journal that I want to talk about this month of, I think I truly enjoyed this strategy a lot because it made me step away from the umbrella of the Tim Sykes, that penny stocking framework, that type of mentorship umbrella that I sat in for pretty much entirely my trading career. All the awesome and great, I have no quarrel against those guidelines of trades. They kept me safe incredibly well. But because I was able to step outside of this, and this futures trading, this setup strategy was entirely my own, I was defining the risk parameters, I was defining entries, exits, all of that. This 100% exposed myself to everything that I am emotionally. I think I was saved and sheltered a lot by just kind of going along with the flow almost of, okay, cutting losses quickly and understanding, this is why we don't do this and this is why we don't do that, blah, blah, yeah, whatever. I always want to let somebody else pay the stupid tax for me. But there are definitely, I do feel with me specifically, and there just are a lot of things that I really need to be paying that myself. I need to have the understanding why these specific things work and why we do these specific rituals. And this, just emotionally based, of having to take these huge losses, of taking a $2,000 loss, saying that to myself 2-3 years ago, that, you're going to take a $3,000 loss in a month, or even you're taking a $2,000 loss in one day, just by your own voluntary control, I would have just probably curled up in a ball and died at that point. And just seeing myself now of where I am emotionally, and the understanding that I have of just money as a concept in general as well too, is so far advanced from where I've come from. I am extremely, extremely grateful and so excited for the future and the progress that is yet to come. And I'm still standing. I'm still going forward. That is everything that I'm pursuing as of right now. Is just, there's going to be more losses, and I want to have more experimentation and data collection and testing of different things that I'm seeing. And that's just what this is a result of it. But as long as I'm still here, as it can't kill me, As long as I'm still able to get $50, I can trade a micro contract and continue in this game. So I'm extremely thankful for you guys watching this video. I'm thankful for Future Brent as you're watching this awesome video. I'm very glad I got to structure this one a little bit better and go more in depth to this specific futures trading. And we will catch you guys on the next one.